We're going to spend some time looking at the different types of hybrid funds today. We've looked at hybrid funds in the past. We know they're those funds that invest in multiple asset classes. They make the life of an investor simpler so that you don't have to invest in multiple funds to allocate assets. Hybrid funds normally invest in equity and debt. You also have some that invest in commodities such as gold and silver, and also in real estate. We need to pay attention to the holding period and the risk levels for the various hybrid fund types because they vary from one fund type to the next, and so uh, having this information handy will help make better investment decisions. When we looked at fixed income fund types, I mentioned that the risk level for the same fund type can vary from one AMC to the next because um, it's all dependent on the securities that are held. I should also tell you that for the same fund of the same AMC, the risk level can change because the securities are being changed on a regular basis. And if you get into more risky securities, the risk level of the fund type will go up. If you get into less risky securities, the risk level will go down. So the first fund type we're going to look at is fund of funds. Fund of funds are those that invest in other funds. Um, there are a really wide variety of funds that a fund of fund can invest in, and so you can't really call out a holding period or a risk level for a fund of fund without actually looking at the holding period or the risk level for the funds that are being invested in by the fund of fund. We also need to pay attention to whether the fund of fund is investing internationally or not. If the fund is investing internationally, we need to factor in currency fluctuations. When the rupee appreciates, returns will go down. When the rupee depreciates, returns will go up. The next fund type we're going to look at is the arbitrage fund. These normally invest in equities and derivatives that take the opposite view. So if an equity does well, the derivative will reduce the gain, and if the equity does badly, the derivative will improve the gain. Returns are normally 7 to 8%, and the taxation that applies is 12.5% of capital gains if held for more than 2 years, income tax if held for less than 2 years. Uh, Arbitrage funds should ideally be held for about a year. They have a low risk level. We're next going to look at conservative hybrid funds. These primarily invest in fixed income and are for the more risk averse investors. Fixed income taxation applies here because the holding percentage of fixed income is more than 65%, and so the fixed income taxation that would apply is the income tax slab rate on the gain. Uh, Conservative hybrid funds are good for beating fixed deposit returns, and they should normally be held for 3 years, and the risk levels can vary from moderately high to high. We're next going to look at dynamic asset allocation funds. Dynamic asset allocation funds are rule based. They normally allocate between equity and fixed income based on numbers such as the price to equity ratio or the price to book ratio. Um, there's no active management going on in most of these funds by the fund manager, and decisions on changing the allocation are just based on the numbers. Um, Normally, when equity markets don't do well, the allocation to equity goes up. When the equity markets do well, allocation comes down. The ideal holding period for these funds is 3 to 5 years, and the risk level is moderately high to very high. We next look at multi asset allocation funds. These invest in gold and real estate in addition to equity and debt. A minimum of 10% is invested in three asset classes. The ideal holding period is 3 to 5 years, and risk is moderately high to very high. Again, these funds are pretty dynamic, and in a period where you're not sure how the equity markets are going to perform, these make a very good substitute. We next look at equity savings funds. These are slightly riskier because they hold at least 65% in equities. This is for an investor that is okay with taking additional risk. The holding period again is 3 to 5 years, and the risk levels are moderately high to high. We next come to aggressive hybrid funds. These funds have an equity allocation that can go up to 80%. Again, they're suitable for an investor that is okay with taking some losses for a period of time, and the risk levels can vary from high to very high. And lastly, we come to the balanced advantage fund. There are no limits on allocation here. The fund manager is free to do whatever he or she wants to do. Um, this is the riskiest category of hybrid funds and also can be the highest rewarding category as a result of the risk taken. The ideal holding period here is also 3 to 5 years, and the risk levels can vary from high to very high. Hope this video was useful. Do reach out to me at my email address, which is adit@aditshah.in, or my mobile number, which is 98675 Do visit my website, which is www.aditshah.in. Um, Links to my social media handles are available there. Do follow me. It'd be greatly appreciated. Thanks for taking the time to watch this video.